my gosh, is the sky falling and everything's going to happen with recessions and inflation? And I just don't know.
No, Mary. Everything's going to be just fine.
You got to tune into this episode and find out why everything is just fine. Welcome back to the March monthly market update. Here in Southwest Florida, I'm Mary Bartos with my friend
Randy Williams with Involved Lending.
And we're excited to tell you, let's just jump in, Randy. You know, this first slide is really talking, yes, the economy feels uncertain, but the data really isn't as scary when you start to think about some of the things that just went in. And, you know, we've talked about this often, that headlines are meant to terrify and not clarify. And there's certainly a lot of headlines out right now.
I feel like we circle back with this exact same slide like every 6 months.
Yeah.
Don't we?
Like rinse and repeat.
And then everything's fine.
Rinse and repeat, and we do it again.
Yeah.
But tell us what Wells Fargo is saying.
Sure. Our model simulations of 10 to 30% sustained increase in oil prices do not come close to generating a U.S. recession or markedly changing the trajectory of core inflation.
Which is key. And let's talk about that again. Signals the economy is stabilizing, right?
Yeah, I mean, economic growth is expected to rebound. Mortgage rates have decreased as inflation has stabilized, and economists don't foresee a recession.
Right, which are great. Now, mortgage rates, they kind of bounce, and they've bounced up a little bit, so we can talk through that in a minute.
Sure.
But, you know, in general, they've been coming down.
Yeah.
And Chris Rupke, what is he saying from FWD bonds?
The federal government shutdown clearly sent the economy careening off its strong growth path in the fourth quarter, which is one off that won't be repeated in early 2026.
Well, we're not sure when they got this quote because
Right.
There is, as we speak, the TSA where they're not paying them, and they're still working.
Long lines in the airport right now.
There are some long lines. So we're not really sure how that's going to play out. But again, I think they're going to resolve it quickly because, you know, the U.S. is, you know, the people are going to speak up.
I just think we're all tired of it.
Yeah.
Get together and get a deal done.
Exactly. I'm with you 1,000%. Yeah. Now, remember, GDP quarter over quarter, you'll see there is only 2 quarters in Q1 of 25 and in Q1 of 22 that were negative. And in order for a recession, we need 2 quarters back to back.
Yeah, I think that the R word is a little presumptive. I don't think there's anything that shows that that's on its way.
No, I love that you said it's the R word. That's kind of how I feel.
Yeah.
Heather Long from Navy Federal Credit Union is saying what?
The government shutdown hurt growth at the end of 2025. The economy will likely bounce back in early 2026, but it isn't harmless to do prolonged shutdowns. Overall, the U.S. economy was resilient in 2025, despite many headwinds. Solid consumption and the AI boom kept the economy growing.
Same story.
Right.
Nothing really changed there. And remember, we've talked about this for forever. You know, inflation, they're trying to get it to be 2%. And it's really held, between 2.6 and 3% for a couple of years?
It's been steady for a long time right now. Obviously, we'd love to see it lower and have rates come down, but it's been very steady.
Yeah. Exactly. So mortgage rates, they were at the lowest level. These slides are coming to you from us on the 19th of March, and they're probably a week or so old. Mm-hmm. And what's really happened with mortgage rates lately?
I mean, look, the war in Iran is the outlier here. Rates have come up about 0.3%, but I think it's short term. I mean, we don't know, but I think if we tidy this up here pretty soon, I think rates have been doing what we've expected them to do for quite some time. Down almost a full % year over year. So that's good. Love to see us bounce back again.
Yeah. What the highest was in January or February of 25.
Yeah.
And it bounced down in 24, et cetera. But look at 7.8% in what was that, October, November of 23?
Yeah. I mean, half of my business is refinancing right now. A lot of the folks that we helped, during when it was higher. So obviously that opportunity is there for a lot of people right now still.
And something you should talk to Randy about, because if you're not looking to move, but you want to get some more affordability, what a great place to do it in refinancing. Mm-hmm. Another factor of affordability is unemployment, right?
Yeah, that's the steadiest graph that's 4 years in a row of basically the same exact number.
Yeah.
So that's about as steady as it is. We're at almost full employment.
Right. And so when you look back at this, the data is not as scary as what's happening with the headlines. This is just proving that point. But something that's near and dear to your ears in my heart, Randy, is what's happening with contract cancellations. They are on the rise nationwide. They're at a highest number. And what to do to kind of avoid them. And I know you're seeing some yourself. Go ahead and read what Redfin is saying.
Nearly 40,000 home sale agreements nationwide were canceled in January, equal to 13.7% of homes that went under contract that month. That's up from 13.1 a year earlier, and the highest January share in records dating back to 2017.
Yeah.
Yeah.
So ours, I did the numbers when I saw this. I'm like, what are ours, right? Mm-hmm. We actually, January and February weren't bad for us. We only had 8%. Not bad. Yeah. But the last 3 years before that, we had some pretty good numbers of cancellations. And I was kind of shaking my head on that, Randy, to say
that's backwards. Yeah.
It's backwards. But on the flip side, was it really because of things that were wrong in the house or something? They rushed in too quickly and then they got cold feet. Maybe they weren't coming after a mortgage, because you're seeing the ones now that are affected by mortgage. It's very interesting.
Well, I'll tell you point blank, just the conversations that I'm having 3 years ago versus now, they're just less anxious right now. They have a little bit more leeway, a little bit more leverage. Mm-hmm. They're just less pressured to get that house and yes. stay in it. So I think that's just a shift in the market from a seller's market to a buyer market. I think it's a natural outcome of the market that it is right now.
Yeah, I agree with you. Yeah. When you look at this, in 17, mm-hmm. this chart shows what the cancellation percentage was. 2017, it was 11.5, and this one is 13.7. So it's 2%, and some change above. Still not crazy numbers.
Right.
And I wonder too, is the type of contract and where the buyers are coming from, and if they're moving into, a new area. We have a lot of that. And as is contract, they can get out for any reason. Mm. And our condos, there's a 9-day right of rescission on the condo docs and things. So that people are really taking advantage of in this market. I've had a few
just random. I had a guy that I was refinancing, and his neighbor ended up selling for $150,000 less, exact comp, than my buddy bought for 2 years ago, and just wiped out his whole neighborhood. So there's a little bit of people that are getting desperate, and you're seeing some of these weird numbers. Yeah. Just throw a monkey wrench in some of the people's business too.
Yeah, I could see where that would be, especially in condos. The highest rate of canceled homes, Florida is got a few of those, 5, 6, and 10. Mm-hmm. So Orlando, Jacksonville, and Fort Lauderdale. Mm-hmm. Now, they're much bigger populations than we are in Southwest Florida, but still something to consider that, that's the case. Mm-hmm. As we move forward, and that was from Redfin. So what is Chen Zhao saying?
High housing costs and rising inventory have made home buyers more selective. Home sellers outnumber buyers by a record margin, meaning the buyers who are in the market have options, and they may walk away if they believe they can find a better or more affordable home. Just what we were talking about. Same thing. Yeah.
Right. Exactly.
Yeah.
And with that, I think, here's a couple of tips that National Association of Realtors suggested, was monitoring the market and acting quickly, because, if demand slips, then there could be a price reduction of 2 to 5%. Mm-hmm. I think I see that mostly with my sellers, because I work with a lot of sellers, Randy, where they're stuck on a price and they just don't want to move, and then we're chasing the market down. They either started too high and they really insisted on that, and and that's a bit of a struggle for some of my sellers. The other thing is be ready to negotiate. I've seen some things that have come together that they gave us like a crazy amount, 30% off the list. Mm-hmm. Nobody in their right mind is going to take that. But we were able to pull it together where the buyer and the seller were still, interested in closing, and did.
Yeah, I've got a first-time home buyer who's doing that right now on the advice of her parents. And it's like,
throwing really low offers.
There are some deals out there right now, but you have to be realistic, and also I don't want to insult sellers, come in with a good strategy, not something ridiculous.
Yeah, it becomes personal for some people, sure. And it could be personal for the listing agent. It is not in mine, because I will present $1. I mean, I've told my owners that, but then how we respond to that ridiculously low offer is our choice.
Correct.
We're too far apart. I have 3 or 4 strategies with that. So just FYI. So talk about what Redfin is saying.
Buyers frequently back out of deals using the inspection contingency. They may cancel their purchase because of a structural issue came up during the inspection, even if their primary reason for canceling is they realize the mortgage payments are too expensive. Or they just jumped in too quick. I mean,
right.
It's just one of your ways out.
Right. Affordability could be an issue, et cetera, et cetera. So let's talk about that. These top 9 things on this slide are from Redfin, and they're nationwide. But I was just talking, Randy, with Joe the Home Pro, who's one of our inspectors. And, there's things that, in my opinion, insurance is huge. Whether it's flood or wind or, that whether they have flood or not can sway somebody. Wind insurance. Now, did you know April Fool's Day that it's all going to change? The way they do wind mitigation. How lucky is that? How lucky are we, right? Mold. Some things that you can just have some simple tests with. Just stucco cracks. That can blow up things because people up north, like cracks in the tiles, they're really not, they're cosmetic. But people from up north think it's structural because there's a crack in the tile.
Sure.
Right? So things like that. And he listed a number of things that you can do preventively. You should watch that when it comes out. There's a blog on it. You can listen to the video, whatever. But those are things, if I'm a seller, that I can do. He also talks about the pros and cons of a pre-listing inspection.
Correct.
If you do one, let's face it, you're going to have to disclose anything that they find that you don't want to fix.
I think that's on the agent, because if you walk into a house and you just start to see stuff visually as you're walking through there, you might want to head off any issues that you're going to have before you ever get there.
That's
that
true.
way, when you do get that one buyer that comes in, we're not scaring them away.
And that's a pro. That's a pro for it. So, make sure you listen to that episode because I think it's really important. So let's talk about the current market. Randy, everybody asks me, and I'm sure they do you, what's happening with home median price, sale price, right? And you can see Marco's pretty steady. It's come down. It's come down a little bit from last year to this year in Naples. It's come down a little bit. Everything just feels steady. Right? Yeah, it's maybe down a few points, but that could be oscillating. This is a median versus an average. A lot of things can change. But, as I present out to buyers and sellers right now, we're not in a declining market where prices are going. Now, there may be a one-off situation where community by community, you need to check that somebody sold their place for really low and now it's a direct comp. I can't do much about that. But in general, the market is strong. When I go to the next one, which is February homes for sale, Randy, we have actually less homes for sale than we did a year ago, which had the high. That means that's great for the sellers because
less competition.
But for the buyers, we've talked about this. This is really interesting for me. What's going to happen in November with property taxes? We're going to get to vote on something. And the question is if it is really good for us that live here, we'll have an influx of people that are coming. So if you're a buyer and thinking, wow, I'll wait, something's going to happen in November. And what person is not going to vote for no taxes?
You don't want to say anything's a foregone conclusion, but I reduce my taxes? Nope. I don't think so. Not today.
I don't think so. So this homes for sale is coming down. People are less. I wanted to also talk about new listings that happened in the month of February. Okay. And you can see those too. They're down significantly from last year. So, again, we're not putting a bunch of new listings in. There aren't a bunch of total listings. There's still a good chunk of homes for sale, but we're not in this crazy gluttony of inventory I felt like we had last year.
Okay, I agree.
Pending sales. So we brought in, let's just use Naples to be as an example. New listings was 1534 in Naples, overall Naples. We pended 1,081.
27% increase
from the year before. But if we brought out 1,534, we sold what, 2/3 of them? Now, yeah, there's going to be some old properties, homes that have been on the market, but that's not a bad thing. And with a 27% increase, I'd say Naples is doing the best. Mm-hmm. Days on market, I love to put this up here just because if you're thinking about selling and you've been in a different market and it goes in like 2 seconds, and we're coming into the spring market everywhere else in the U.S. other than the sand states, it's not selling in 2 days. We're selling in, 90 days in Fort Myers and 82 days. And this is average days on market.
And again, if you've been in this business long enough, this is more normal.
Very normal.
Like the general public has just been so spoiled, like recently with some of our markets, that things just would go fly off the hook. This is just what a normal real estate market looks like, guys.
And for me, it's funny because when I got into the business, you could sell a house in the number of days you had a baby.
Yeah.
So it was like 270 days on the market.
Yeah.
That's basically having a baby.
There's a lot of buyers out there right now.
Yeah, there are. And they're wanting to be where we are. Yep. So, which is great. Our weather's fantastic. I'm sorry if you're in a state where it's ridiculously cold in this March and tons of snow, you need to come down this way. Average showings to a pending. I like to talk about this again. If you're a seller, we had a lot of stuff on buyers because you really want to know, okay, how many showings do I have to get into actually pen to my house? So you can see it's anywhere between 10.8 and 12.2. Okay. And in a month, I'm getting 3.3 showings in Fort Myers, 3.4 in Marco, up to 4.2 in the Cape. So on that listing, so in the month of February in Cape Coral, it was 4.2 showings, which is pretty good. It's up. But if we go back and think about that, from that perspective, the average shows to a pending in the Cape were 12.2. So how many months is that? 3+ months if the price is right.
Key, if the price is right.
Or when the price gets right.
Correct.
Right?
Yeah.
So, Randy, I know we always end with, is it time to move?
I always say yes to that answer. I mean, I just think we live in such a place that so many folks love and enjoy, and they have so many memories here, and they've been coming here for so long.
Right.
And I just think the long-term trend of where we are is outstanding.
Yeah. Right?
So people get caught up in the minutia of what is this market versus last year, or this or that or the other. What are rates in this?
Right.
It's all about your peace of mind. It's all about living where you want to live, experiencing what you want.
Yeah.
And over time, gosh, is there a better place to invest?
There is not a better place to invest. And I will have to tell you, because if you're anywhere near my age, and how many more days, how many more years are you going to have around the sun? Yeah. How many grandchild moments are you going to have? What are you going to do with the days that you have? I'd say there's no better place to have that experience than right here in Southwest Florida. So if you're thinking about buying, we'd love to help you. Randy can certainly get you a mortgage. I can help you on the buy side. If you're thinking about selling, we'd love to help you get into the next house, or maybe move into a continuing care facility, or move with your kids, or get a bigger place, whatever it is. We'd love to do that. So if it's right for you to move, then it's the right thing to do. So until next time, I'm Mary Bartos with the Bartos Group of Premier Plus Realty.
And Randy Williams with Involved Lending.
See you next time.